Yo, what's up, everyone? It's your boy, Looney, and today we're diving into a topic I get asked about all the time, and that's how to grow a small portfolio. We're going to look at specifically turning 500 into 5,000 using options. So, quick spoiler alert, it's not about YOLOing on risky plays, and it's not a one-day return you're going to get this. It's a long-term investment. And we're going to keep it steady and strategic. Let's jump in. But first, don't forget to check out my Discord. Whether you're new to trading or a seasoned investor, we have a free version for general chat and updates. And then I have a premium version with trade alerts, one-on-one coaching, and exclusive giveaways. Links are in the description. Don't miss out. So first off, we're going to talk about selling cash secured puts. Here is how it works. We're selling puts on high IV stocks like Kohler. Let's look at Kohler, for example. I know the stock dropped a bunch, just like MicroStrategy, but it is important to look at because it is a high IV. Or even NEO. NEO's a little less, but both are trading in that $3 to $5. This one actually went down a lot in the past, I believe, month. Doesn't look like a lot, but I guess past week it went down 32%. So yeah, it went down a lot, but it doesn't mean it's a bad investment. This might just be a longer, more riskier play. So I wouldn't put all your money into this, but if you have some money that you are looking to take a risk and a defined risk, so that's a selling cash secured puts work. It's a very defined risk. So we're going to look at selling a put on this stock. So you would go out 1 to 6 weeks. Let's go to January 17th. Today's the 2nd. Let's do February 21st. And we're going to go down. You can see the deltas are a lot, actually. And because the stock is so volatile, the IV is up 190%. I would not go to a high delta. I would definitely be on the safer end, definitely under 20 for this kind of stock. And 20, even under 10, but that might be a little too safe. I would do this $2 and then go out those 2 months. And if you're trying to do $500, you can change up how many contracts you'd want to do. So let's do 3. You'd put up 525 and you can make up to $75. And if you did this for 2 months, you'd be surprised how quickly this turns into 5,000, especially when you get assigned the shares, because that's when you start to make real money on the realized gained and also the premiums. And that's what I have going right now. I have Riot that, although my average or total return is up 11%, if we add up all my premiums, it is a lot different. I'm collecting premiums every week, every month, and you could see these numbers are getting added. I do roll, so you might see that, but a lot of these are ads. The only negatives are the assignments, but all these plus, these little small ones, are premiums that add up. And it's not truly my return is 10%, or what does it say, 11%? It's probably higher than that. And I was creating a tracker on premium selling options. I didn't finish it, but I'm working on that for premium members. That's another quick little plug. So as long as Kohler stays above that $2, which is very likely because it just dropped 34%, the likeliness of it to go down another 30% isn't impossible, but even if it does drop, you're getting it at a discount. So if you get it at $2, that doesn't sound too bad because right here it was $2 or right here is $2. So this is a very risky play. I wouldn't do this every week. I would just do it with a small percentage of your money. I'm personally not doing it, not because I don't like the trade, but because I like a little bit more of a safer trade. But safer trades do need more money. So Riot, you need to afford 100 shares. So you need more like 1,000 rather than that $500 mark. And then I could show you guys covered calls. It works in the same way, but instead you own the shares. So you're selling at a strike above the current share price, and you'll be forced to sell if it does reach that. and you earn premiums, very similar to cash secured puts. I'm not going to go too much into detail on this one because I don't want this video to go on too long, but it works very similar. And actually, the way you would get a covered call is to sell a put to get assigned, and then you sell a covered call against your shares. And then even if your stock drops low, you could do another cash secured put to bring your average cost down, all while collecting that premium on the covered call and the other options you're running or other investments you're running. So the catch with this is that it's not a get rich quick scheme, which is something that I like. Growing $500 to $5,000 takes time, discipline, and willingness to reinvest your premiums and a willingness to reinvest your premiums. Avoid the temptation to chase risky plays or over leverage. If you look at my portfolio, I'm up 41%. And although I'm heavily exposed to crypto, my portfolio doesn't go up and down so drastically. You can see it's a steady growth, sturdy growth. It does decrease. Yes, there is some volatility, of course, but it steadily is growing. Even on the all-time return, you can see that it's a steady growth and not insane returns, but very safe and very consistent. So there you have it, a step-by-step plan to grow a small portfolio using options. If you found this helpful, smash that like button, subscribe, and drop a comment with your favorite small cap stock for selling puts. And don't forget to join my Discord for more tips and live trade alerts. Let's keep stacking those wins. Peace.